Good morning. I'm here with Steffen MEISTER of Partners Group, who's the executive chairman. Good morning, Steffen.
Morning, David. Thanks for having me.
Please introduce yourself and your firm.
Sure. I'm Steffen MEISTER, executive chairman of Partners Group. We are the largest middle market firm in the world with about $150 billion asset management. About half is corporate equity, about half is real assets and credit. We are, I think, well known for being a very active investors. We call this transformational investing. So we very thematically choose the ecosystems where we have a hypothesis for asset development growth, and we invest in anchor assets that we build to winners in this segment. We're also well known for the fact that we operate a lot of tailored programs for our clients. Mandates and open-ended funds and wealth management products come up for about 2/3 of our assets under management.
Thank you. I think last year when you were here at IPAM, you were talking about the role of private markets being pivotal as a growth engine for the economy. But now things have changed because there seems to be recalibration of the economy with AI and interest rates and so on. So why do you think this recalibration is taking place, and what will be the role of private markets in helping the economy getting through this?
Sure. Look, David, I think what we have to distinguish is the recalibration of the economy and price setting and transaction activity versus the role of private markets. So I'll start with the first. What is natural is after such a long period of a bull market, and inflation coming back the first time after many, many years, decades effectively. You see a resetting of policy making by central banks, by policymakers and governments, and naturally that comes with a certain recalibration of entry multiples, valuations, and so forth. So that has certainly come down or brought down a little bit the activity in the private market per se. Now, compared to public market, the private market was actually much, much more active. Private market activity has come down maybe about 50% compared to 21, yes. Whereas IPOs have come down maybe 70, 80%. Now, what's interesting is that in this recalibration, the market share gain by private market has been bigger than ever before. So, for instance, if you measure this by fundraising, private markets compared to global equity issuance in the last 2 years, the gap has never been as wide as before. So, what private markets, I think, is showing, talk about the role of private markets, I think private markets have clearly become the stewards of the real economy, much more consistent in financing businesses and assets in this a little bit more difficult environment where you see that recalibration, resetting than public markets.
How do private markets have to adapt how they invest? Is there any sort of recipe, or is there the Partners Group recipe that works particularly well for you guys?
That's for sure a Partners Group recipe. I would say at the broader level, look, the times like 2011, 12 to 2021, when with financial engineering, you actually made a pretty decent return. I think that time is over, okay? So in that sense, I do think a very big part of the industry really needs to think about, adapting their investment style to be much more active. What's the big benefit of private markets? It's not the leverage, okay? The big deal in private markets is that you have a governance that can employ control in a way that family businesses would do it. So you have one shareholder very much aligned with the management team, the business, and so you can steer the business, not on a quarterly number basis, in the long term, very strategically, very hands-on. That's the benefit. And this is what we've done the last 10 years, 20 years, and I think this is becoming much more relevant actually in this environment. So if you ask about Partners Group, there's no change in strategy. We have been transformational investors for years. But if anything, I think we have to watch out even more for the change of the economy. The big thing next to the macro environment change is that this transformation of the economy, that we see happening since hundreds of years, industrialization, service business, first digitization, is continuing with a new generation of technology. But it happens faster and faster. Yes. So we have also in private markets, as in public markets, we have to be very thoughtful about these different ecosystems, how they will change in the next few years, what is the winning business model, and then buy and build businesses towards that winning business model. That's the recipe.
And in the next decade, people say there's 30 trillion of investment opportunity, which is a lot of money. Who is going to get the cash? Which asset class do you think are going to do best? Infrastructure or debt or, growth?
Look, in absolute amounts, I think corporate buyouts will still be the biggest part. But the thing is, what will happen is that the growth of the private equity segment, I think will slow down somewhat. We saw nearly 15% growth in the last 10 years, well, probably true for the last 20 years. I think that growth will probably come down more to 7 to 10%. I think you'll see more growth in infrastructure. There's just a tremendous need for financing for infrastructure. The governments will not do it. And you have, in data, in energy, in social infrastructure, you have, tremendous pent-up kind of demand, and this can only come from private markets. You see also in real estate, might be a little bit counterintuitive because everybody's moaning about real estate at the moment, especially offices, but you might be surprised that you see actually a lot of activities happening around real estate. And the reason is the following. We have a real transformation of real estate ahead of us. Affordable housing is a big topic, senior housing, big topic, also student housing actually, specialty, industrial businesses, logistics is a big topic. And even offices will not stop to exist, but they will exist in different ways. That transformation, will require a lot of capex, a lot of operational hands-on change. That can only happen in the hands of private markets. That's not the pension funds who will do that. And then credit, lastly, will benefit from continued structural change. Will take market share from capital markets, market share from the banking system. So in that sense, I think you will see all the four asset classes to grow. The last asset class that came to private markets is royalties. I want to mention that because it reminds me a little bit of direct lending 20 years ago. It's a new financing technology for assets with a relatively limited balance sheet. That is probably an asset class you will see actually growing massively in the next 10, 20 years.
Thank you. That was super interesting, Steffen.
Thank you, David.